and thank you for joining me. I am Marilee Rowley, and this is Real Estate Real Talk from Selling Salt Lake. And we are here to talk about all of your New Year's resolutions and goals regarding housing. Today's January 6th, 2025. It feels like the first real day of the year. And as we get started with the year, it's a good time to talk about what you want your housing goals to look like. And that's going to be different for everybody. If you're a first-time home buyer, there are some specific things that you should know and work on and act on to meet your real estate goals this year versus if you're an investor. There are just different strategies to use depending on where you are. So let's assume you are a first-time home buyer and you're thinking about getting into your first owned property this year. Couple of things that it's really important to start out thinking about. The first one is you got to talk to a loan officer. A loan officer who specializes in helping first-time home buyers is going to help you to understand what your options are regarding how much of a down payment you need to spend, how much you can expect your payment to be based on your credit scores and your interest rate. And also, he or she will help you determine whether or not you need to save a large down payment or if you can get away with no down payment, if there are any grant programs you qualify for. So there are a lot of different ways to look at your financing. So the thing to consider when you are deciding to purchase a new home and you're a new home buyer and you maybe don't have a huge down payment saved up and you maybe have a credit score that could be a little better, you are joining into a partnership with a lender. The lender wants to give you money for the mortgage to buy your home, and they are going to be sort of a silent partner. You are going to own the home. It's in your name. All the appreciation that comes along with owning a home belongs to you. But initially, let's say, for example, you take out an FHA mortgage. Those are great mortgages for first-time home buyers. They require that you only have 3.5% down, and you can have a lower credit score and still qualify for the same interest rate. When you do have an FHA mortgage, you are going to have a pretty hefty amount of mortgage insurance that you're going to have tacked on to the beginning of your loan that's going to be added on to your principal balance, and every month you're going to pay a portion of mortgage insurance. Now, like I said, you're going to have a really good interest rate. Typically, FHA has lower interest rates and they have higher mortgage insurance. If we switch gears and go over to a conventional loan, then that starts as low as 3% down. And you do have to have a little bit of a higher credit score in most cases, and the interest rates are going to be a little bit higher, and you still will have mortgage insurance. So even though you have this partnership with the mortgage company, it's important to know that that partnership is going to be kind of expensive because they are putting up 96.5% to 97% of the actual value of the property. And then as you pay them back, they just have rules and regulations to follow that mean that that loan is going to be a little bit more expensive. Now, if you have 20% down and a really high credit score, that's your best case scenario for buying a home for yourself. You can have the lowest interest rate and then you don't have any mortgage insurance when you have 20% or more down on your loan. So your loan is going to be less expensive, but here's the thing that people don't take into consideration. If you decide to wait and save up 20% for your down payment on your first home, that can sometimes take years. Depending on how much you save and how much you make and all of those things, those factors that really do make a difference. Let's say, though, that you spend 5 years saving up 20% on your first home. Well, in those 5 years, housing prices will have increased, so that 20% will have to get bigger and bigger every year to make up 20% of that year's prices for a home. And you won't have been taking advantage of that appreciation. But if you decided to go for it and you only have 3.5% down, in most cases, you will have made up that 20% in appreciation. And so you will end up being way farther ahead the sooner you get into the housing market as opposed to later. The way to think about the housing market is time in the market results in the greatest returns, not timing the market. When's the best time for me to buy? That could depend on so many different things, but the longer you have in the market, the more appreciation you will realize. So for most people, it's better to get in with a lower down payment, which could mean a higher interest rate, and it could mean mortgage insurance, so it'll be more expensive up front, but 5 years later, you'll definitely be farther ahead than if you had waited and saved that whole time. The best way to find out what's the right strategy for you is to talk to a skilled mortgage loan officer, and they can help you understand all of your options. So that's for first-time homebuyers. Let's say you are an investor and you have some goals to buy an investment property or two this year. There are lots of different loans for you. There are loans available for you as an investor where you don't have to supply W-2s, 1099s, bank statements, all that personal private information that's also just kind of a hassle to put together. You can instead provide a rent roll for a property for however much you'd be renting it out for, whether that's commercial space or residential space, and then you will put down your down payment, and then based on how much you're going to be bringing in every month, that's how you'd qualify for the loan. So that's a great way to get into an investment property as an investor. That doesn't work for a first-time home buyer, but it's a great strategy if you're an investor. I will say that if you're an investor, you are going to be much better off having 25% down at a minimum than having less than that, because interest rates for investors are quite high right now, and it's hard to cash flow if you have anything less than 25% down. 25% down will get you the best possible interest rate you could get, and then of course when you owe less and your loan payment is less, it's easier to cash flow on that property. But remember, as an investor, even if your cash flow is zero, you don't have any net return, you still are enjoying appreciation over time in terms of the value of the property. And talk to your accountant about depreciating this asset on your taxes to lower your income taxes, potentially. I'm not an accountant, but you should talk to one. So generally in Utah, we experience the greatest activity in the home buying market in the spring. People buy and sell houses all year long. There is no magic season for the best time to buy or sell a house, but traditionally we do see the greatest amount of activity in the Utah housing market during the spring months. So we'll start to see the market do a slow ramp up between now and about March, April. March, April, it'll get really pretty busy. May, June, it'll steady out. We always have a dip in July. I think it's just because there are so many families that go on vacation in July. We have a little bit of a bump in August and September through Halloween, and then we experience a general holiday slowdown from Halloween through the new year. So that's what you can expect typically. But there's no magic time. If you think about a swimming pool, there are always buyers and sellers. It's just sometimes it's the shallow end and sometimes it's the deep end. But there are always people ready to buy and sell. So you have to figure out what's the best time for you. Does it make the most sense for you to wait until a specific life event is over? Or does it make the most sense for you to jump in when conditions are right for you? That's a personal decision. There's not a magic time, and over time, all of those kinds of ebbs and flows even out. So when's the best time to buy a house? 20 years ago. When's the second best time? Right now, or maybe in 6 months, whatever's right for you. So the last thing I'll leave you with today is a piece of advice for buyers and sellers, and that is talk to whoever is going to help you buy the house. Whether that's a loan officer, whether that's a real estate agent, whether that's a family member, start those conversations now so that when the time is right, you'll be ready. I just read this great book by Ina Garten, and the title of the book and the theme of the book is Be Ready When the Luck Happens. And her whole message throughout that book is There were opportunities that came about in her life at different times for different things, but she was always ready. She was always working for what she thought she wanted to have happen next. And then sometimes that thing happened and sometimes something else happened, but no matter what, she was ready. So get ready. Be ready for when your luck happens this year. Talk to the people you need to talk to so that when it's time to jump in, you're ready. Please don't forget to follow us on all our socials. We're on Facebook, Instagram, YouTube, Lemonade, that's a new one, TikTok. So join us on our social. I am joined today by Kat Aspel and Camaro Holt, who are producing this program. Thanks, ladies. Thanks for joining us today. We'll see you on the next one.